Well, it's day 18 of the video challenge, and I just got a little lesson in always putting your phone on the airplane mode when you start to record something, because I was about 4 minutes into a pretty good video, I thought I was doing well anyway, and some spam number called my phone and went back to 0 on my video time. I don't know, maybe it saved that 4 minutes, but I did not even look. But anyway, I was just going to make this one about oil prices, because they're after a Friday half day of trading. It looked like they fell about 12% or something ridiculous, and after a dead cat bounce yesterday of a 2 or 3%, it looks like they're down again. WTI was down again 3% today, so it's not looking good for a lot of the oil longs at the moment. And I know there's a lot of things that push the oil market, but I remembered one thing last week when there was a big story going around that Joe Biden was going to sell off some of the 55 million barrels out of the strategic oil reserve, which someone pointed out is about 3 days worth of oil use for the United States of America. So it's kind of a drop in the bucket, so to speak. But anyway, the energy secretary or some lackey came out and did a press conference after Joe Biden, and there was some woman that was just pardon my French, but just an idiot, or just being stupid, saying that they estimated that the price of gas in middle of January or December was going to be $3.19. Like some damn pencil pusher who works for the Department of Energy would have just a remote idea of what gasoline is going to cost in a month and a half, or much less tomorrow. They've got no clue, and she was making some really stupid comments and she didn't even know what the number was for the daily consumption of oil in the U.S. and it was a kind of a fiasco, and it kind of it made the administration look really stupid, and the oil didn't go down at all. So I was kind of curious when it went down 12%, if maybe they had the plunge protection team, or the whatever those big dark pools of money the Treasury or the Fed uses to move markets around, if they had them just throw it all that in there and tank the oil price. So that's maybe a wild conjecture, but I wouldn't put it past them. They look so stupid when they put that out, and the way the market responded, that they know they had to apply a lot of dollar pressure downwards to break the whatever moving averages that caused the crash. And I know someone would say that, watching CNBC would say, oh no, it was a new variety of the beer flu, and it scared the global markets and what have you. But there's a lot more things, a lot more goes on beneath the surface in moving financial markets and commodity markets. If you follow especially the precious metals for any length of time, there's a lot of shenanigans that go on behind the scenes, and provably so. But no one likes to go down that rabbit hole if you're a mainstream type, everything's going to be fine kind of guy, which I think everything is going to be fine, but not in the way they do. But anyway, I'm laughing at myself because I thought about buying, since I'm going to be buying so much diesel over the next few months, I thought about buying it like a chunk of a triple levered oil fund, and that was right before it tanked. So I'd have lost my ass. I'd have lost however much I put in. It would have been down like 30-40%, and just goes to show how being a part-time hedge fund manager is not a real viable option. In fact, I lost over the years. I've been trading in some of those junior miners, like a Nugget or a J-Nug, some of those triple levered funds based on the junior gold and silver miners, or the regular. Anyway, I think Nugget is based on the GDX, which is just the index of your kind of not majors, but general gold and silver, and the J-Nug is based on the juniors, which are a lot more volatile, so you can catch some big pops up and down. Anyway, I one day a few years ago, I was in a trade that was doing pretty good over about 3 days, and it was like I knew I had to sell one afternoon before a Fed meeting, or right after a Fed meet, or I think it was Janet Yellen was giving a press conference, because whatever she said was going to move the markets down, and knew it was coming, but I had to go shoe a horse and say, well, I got time, and then I missed it by a few minutes, and boy, that sucker, I don't know, probably the GDXJ dropped like 4% in one, just a few minutes, and the JNUG went down whatever 3 times that, so 12, and a lot of the progress I'd made in my trade over the last few days just completely went in the crapper, and I got out of it, without doing too bad, or without losing too much. But anyway, that reminded me of this the other day when I thought about trying to hedge my diesel consumption by buying some type of levered oil fund over the next couple weeks or month or so. And then they somehow, and I'm still studying and reading up on this. I don't know. It's got a lot to do with inflation numbers being. They said that they were transitory, and I think all this has to do. Oil tanking probably, in all likelihood, has a lot to do with the perception that the Fed is going to raise rates and they're going to slow down. They're going to finally slow down on this big bubble that's going on and everything now. And the general financial media thinks that the Fed can just taper. They can raise interest rates by a couple, 25 basis points or 50, or get up to maybe even up to 1% over the next 2 years, and that everything's going to be fine, that it's not going to completely crash and burn the whole global economy such as it is. And that's a poor assumption if you're not paying attention, if you think that the Fed, the Fed is trapped, and they have to, in order to maintain their balance sheet, in order to shrink their balance sheet, they have to get rid of a lot of debt they have, a lot of crap that they have on the balance sheet, and there's no way they can really back off and taper without spooking everyone in all the major indices. That basically, if you look at a chart side by side with the S&P and interest rates, or S&P and Fed bond purchases, it's dot for dot, limb for limb. And so the Fed is having a hard time maintaining their illusion that everything is normal and that they can taper and get back to some historical mean on interest rates. Not zero is the point. But then they have to contend with the fact that anything close to historical average of interest rates would being 3 and 4%, or even, that's on the low end, it really could be 6 or 7, that the interest on the U.S. national debt would quickly become the largest. It would basically balloon into the biggest thing. It would be trillions of dollars just interest. So that's not possible. It's not feasible. So they're really between a rock and a hard place, and it's kind of hard to tell. I'm always trying to look and guess at where things are going in case I can throw a couple thousand here or there and leverage some of the moves that are the volatility that's coming. Right now I'm too focused on other things, though, so that's, I guess, the message here is that it's not always a good idea to be a part-time hedge fund. You got to be in it all the time, and I may not like money that much enough to really study it and do it full time. So I'm always tempted to gamble sometimes. I love to gamble, and every now and then I dodge a bullet like I did the other day, and didn't pull the trigger on a bet on oil going higher. And it looks like right now, after that dead cat bounce yesterday, I haven't seen the moving averages, but I bet you there's room to fall. And that's all. But then you have to balance that with the fact that Jerome Powell came out today and said that inflation is not necessarily, or he basically said it's not transitory. He took that off the table, and so now everyone's trying to scramble, and the dollar equalized and went down. It was shooting up. It stabilized the dollar. So maybe after him saying that, then maybe oil will shoot up higher. So if I was doing this full time, I'd have to be thinking a lot harder about it. But right now I'm just going to sit tight in cash and just buy the diesel when it comes. So thanks for watching this ramble. Just remember to protect yourself. If you don't have a small percentage of your assets, at least, if not more, in precious metals, that's what's the best thing that's going to help you weather the storm that's coming when this whole kit and caboodle comes crashing down. However it does, who knows? That's a big topic and for another video, but I'll get into more of that. And just since I move around a lot and can't always have I won't go there today. We'll talk about that another day. I'm gonna end it right there. And thanks for watching this one. Please subscribe, like, share, whatever you can do to help me get more eyes on this if you think it's got any value. Which this has been a ramble, so I don't know about that, but I got better stuff coming, so stick around and have fun. Remember, eat steak and be a winner. That's how you do it.